to the commodities market at this point, find out what's playing out there. We're seeing a lot of volatility in the oil market, cocoa, and all of that. Let's bring in Dumebi Oluwole now. She's the manager, economic research, financial derivatives company, joining me right here in the studio. Dumebi, it's great to have you. It's been a while.
Yes,
how have you been?
I've been good. How
How's
about
the
you?
market?
Markets are marketing.
Marketing, you know, as usual.
Doing its thing.
Right, and talking about doing its thing, we're seeing oil there.
Yes.
Was weak last week. That's talking about price action. I did think at some point we might lose that $60 level, but it wasn't lost.
Yes.
But we're starting off this week kind of strong. What are you seeing play out there in the oil market?
I mean, both demand and supply dynamics playing out in the oil market. We are seeing that from OPEC, there's an increase in supply. They are planning to increase supply from October. Saudi Arabia is planning to, really take back that market share. Then that also coincides with Russian oil, kind of flooding the market at the moment. And we are seeing somewhat of strong demand as well. The demand side is a bit mixed. There are aspects of demand that are kind of slowing down, and there are aspects that are also rising, because we have seen that over the last couple of weeks, China has been stockpiling, and that is giving mixed reactions to the market. So on the first angle, it's more of there's an increase in demand, but there is not an increase in consumption for what is demanded for. So what that means is that inventories are building up, and in the coming weeks, demand might slow down. So the markets are actually pricing in all of that dynamics from the supply side and on the demand side, and we are seeing that oil prices are actually trending downward. In terms of the outlook, we do think that oil prices are going to keep slowing, keep declining, and it could fall, to about $60 per barrel towards the end of the year. JP Morgan is actually forecasting lower than that, about $55 per barrel. And what that just tells us is that there are concerns in terms of how Nigeria's revenue would play out, because even though our production is increasing, there are good prospects on there. We've seen Nigeria meet up with its OPEC quota of crude oil, about 1.5 million barrels per day, and when you add condensates, that's about 1.7 million barrels per day. That looking at that number, you see that we're doing pretty good. We could do more, especially to meet up with the 2.06 million barrel per day in the budget. But when you put that oil production mandate coinciding with lower oil prices, there are concerns there in terms of how government revenue would suffice or even be propped up in the next coming weeks.
And definitely that's supposed to be good for fuel prices.
Exactly.
With lower oil prices.
Yes.
But we're seeing that face off here between the Dangote Refinery and NUPENG. And definitely they don't want him to have his own trucks, at this point, supplying or distributing his own products, because that kind of takes them out of business. Yes.
I do. So right now, all of that sentiment playing out in domestic market, I think what that does for us is it raises the question of what really is important right now. And I guess coming from a world where we've seen a lot of cyclicality, we've seen a lot of shocks to consumer wallets, right now the goal should be welfare. The goal should be how can we ensure that consumers are actually supported in the best way possible. And right now, when you put the Dangote situation coinciding with the distribution networks that we have and the current situation, you realize that there's a lot more, and I'm going to say this very bold, a lot more politicking going on right now rather than the concerns for consumers. While there is the need to...
Because I keep wondering, who's fighting for the consumer?
Exactly.
At this point, it seems everybody's fighting for their pockets.
Exactly. So while in economic theory there is that concern of the monopolistic tendencies of Dangote, there is that concern. But right now, the truth is we are coming from a world where we've had a lot of state-owned, government-owned refineries. We've had the distribution networks existing long before Dangote came into the scene, and the inefficiencies have been there, the market disruptions have been there, the consumers haven't necessarily felt the relief from all of these systems being in place because of those inefficiencies. So Dangote coming into play right now has not, number one, taken away from the inefficiencies that currently exist within all of those state-owned parastatals and programs and whatever the case may be. What it has done is, in fact, exposed it even more to see that we can do better, right? We can't do better because now he has come into the scene and we see that there's more market efficiency playing out. We're seeing that prices can actually reduce when, you know, the production cost also reduces and consumers can actually enjoy that. There is the lag, but we're also seeing these market efficiencies to some extent play out. So while there are that risk, I will say this again, it's extremely important that the consumers are well protected and the focus should be on how best to ensure that within this tight period of reforms and consistent squeeze on consumer wallets and business operations, the focus should be on how to ensure that there's enough supply, that prices become more stable and even begin to steadily decline. And then we can start having those conversations on regulations and ensuring that the monopolistic tendencies or that risk is curbed. But doing that right now, I think it will be more disruptive than productive.
Because I can imagine the average guy on the street right now, seeing all the drama with the face-off between NUPENG and Dangote Refinery, and he's wondering, how am I going to be able to buy fuel at a price that I like, that's friendly for my pocket? I'm squeezed on all sides, at this point. I guess, we just hope that all parties can meet up and somehow the consumer is, also looked out for. Yes,
we do hope that. We do hope that.
All right, let's look at the Naira now. We're seeing a gain there, 1,520. Naira market, 0.53% in the official market. I guess it's still good news. Right there, the reserves looking robust.
Good. Yes. So we do expect this trend to continue. There are risks, but I would focus right now on, the current factors driving the Naira stability. Like you rightly mentioned, we're seeing reserves increase, even edging closer on a faster level towards $42 billion. And that has hedged, speculative tendencies that could exist in the market. So the consistent supply-demand dynamics and, the market transparency that we're seeing is consistently, bolstering investor confidence and bolstering market confidence. And we expect that to continue. Supporting the Naira. We're also seeing capital inflows, keep increasing, pretty much FPI. So there is still that concern on the increase in FDIs. But what we are seeing is that in the short term, the Naira stability would be consistent, and that convergence with the parallel market, we expect that to also continue. The risk that I was going to just point out, we're in the end, Dirty December is coming up, that increase in importation, in import demand, so that means that forex demand is also going to, keep increasing for businesses to stockpile and prepare, for the Dirty December period, and then
so
also.
Ronnie has called it the dirty. DDD.
Yes, the Dirty December. So it has really become a thing. And beyond that, you also look at, the diasporans coming in. So there's that increase, in demand for forex. There's also this international school fee payment. So September, October is a period where you find a lot more demand for international school fee payments, and that also is going to definitely have some pressure on the market. But we still expect the Naira to continually trade at the band is currently trading at.
And parents are working on back-to-school expenses right now, and still trying to make way in the domestic market. What are you seeing with cocoa futures? That's down about 2.69%. What's driving sentiment there?
I mean, increased production, increased supply from West Africa producers. You do know, between Ivory Coast, Ghana, Nigeria, Cameroon, those four markets account for over 70% of global cocoa supply. And right now, with the rains that we're seeing, which are favorable for output, we're also seeing that so pretty much cocoa output is increasing from West African markets. Ivory Coast as well, on a year-on-year basis between September this year and September last year, we've seen almost approximately 6% increase, in cocoa supply. So we do expect that trend to continue, and of course that's going to keep, impacting cocoa prices, meaning that cocoa prices are going to come down consistently. And then you also consider that the markets right now, in terms of demand, is not necessarily as strong as it was some months back. So that means that we're seeing increased supply meeting lower demand, and that will continually put, downward pressure on prices. And if that continues, what that means for Nigeria's export earnings is that it could decline, even though output is, increasing. And that's somewhat like the parallel between the oil production and then lower oil prices, and also the same thing impacting here. So that's when you juxtapose both of them together, you see that there's some more pressure on Nigeria's, revenue in the coming weeks or coming months.
Well, hopefully we don't have too much pressure.
Of course,
at this point. Thank you
so
much, Dumebi Oluwole, Manager, Economic Research, Financial Derivatives Company.
Thank you for having me. Thank you.